In today's screencast, we will learn about the accounting concept of petty cash. A petty cash fund is an amount of cash kept on hand to pay for minor expenditures and involves three core activities. Number 1, establish the fund. Number 2, making payments from the fund. And number 3, replenishing the fund. First, establishing the fund. This is done by writing a check for the amount of the fund, cashing the check, and then placing the cash under a designated employee, formerly known as a custodian. A journal entry is then made to record the transaction, debiting petty cash and crediting cash for the amount of the fund. Secondly, making payments from the fund after the fund is established. The cash is used to pay for relevant expenditures, and this is generally done in one of two ways. 1. Cash is taken from the fund to make the payment, or 2. Employees can seek reimbursement from the fund from payments that they have personally made. No journal entries are made, hence making it important for the custodian to collect receipts. Thirdly, replenishing the fund. The remaining cash is counted and a check is cashed to bring the fund back to the original balance. A petty cash fund replenishment report is created to list all expenses the fund has incurred and to calculate the cash required to replenish the fund. Note that the total receipts should equal the cash required to replenish the fund, since the cash and the fund were used to pay for those expenses. A journal entry is then made, debiting the expenses incurred by the fund and crediting cash for the amount of the check. But you may be asking yourself, what if the amount needed to replenish the fund does not equal the total receipts? Sometimes the custodian may not receive all receipts or may be given incorrect change, creating a discrepancy between the amount needed to replenish the fund and the total receipts. In such a situation, the discrepancy is charged to a temporary account called cash over and short. An example of the use of this temporary account is now shown. The cash needed to replenish the fund is $70, but the total receipts are $65. The $5 difference is charged to the cash over and short in the journal entry made to replenish the fund. That concludes today's screencast. Thank you for watching.